Hi, I'm Tom Lydon here in San Diego at the Charles Schwab IMPACT Conference. I'm here with Marc Zeitoun, Head of Strategic Beta at Columbia Threadneedle. Marc, as always, good seeing you.
Seeing you, Tom.
So you and I have been at this ETF thing for a while.
Yes.
And it continues to evolve. It's not just passive anymore. Are advisors looking for more intelligent indexing?
They are, and it's exciting to be here at Schwab specifically because this is where some of the newest stuff comes out.
Yeah.
And we went out to our advisor base and we had surveys, and we learned that our advisors, about 72% of advisors expect asset managers to infuse their best thinking, even in their passive products.
Okay.
Which is sort of like, well, how do you infuse your best thinking in the S&P, for example?
Yeah.
It's kind of hard to do that when you're tracking that. We took an approach where we took the Russell 1000 and we applied our research, and we just took out the names that we don't like. Because we thought that if you're going to track an index, at least give yourself an edge.
Yeah. So rather than doing a factor overlay or something like that,
Simple.
Came right down to the research and say, look, it doesn't matter the sector or factor or whatever. There's some companies that just didn't make the cut.
That's right. And I think factors sort of make things a bit complicated for a lot of advisors and investors. And taking something as simple as overlaying your research onto a benchmark, that's simple.
Yeah.
And taking out the names that you have no conviction for, that's even more simple.
Yeah. And just the whole nature of money management, going from active where it really came from to passive,
Yeah.
That's a big chasm to overcome, isn't it?
And no two advisors are the same. I think asset managers really have to work hard and meet clients where they want to be met, as opposed to say, here's what we do and why is it better than everybody else's?
Yeah.
We're committed to offering an array of solutions. Fully passive, fully active, and that in-between space that we're talking about.
Yeah. You've got a couple tools that you've introduced recently. Talk about those.
We just launched last month 2 new ETFs called REVs and REX. They stand for Research Enhanced Value and Research Enhanced Core. They're both based off of the Russell. And a lot of advisors track the Russell 1000 or the Russell 1000 values. So we simply took the Russell 1000, overlaid our research, and delivered REVs. After we removed the names, we optimized the sectors to make sure that you're not taking unintended sector bets. So our sectors align perfectly with the benchmark. We did it with 1000 value, we did it with the 1000 core. And we're very excited about it.
Now, finally, before you go, we've done a lot of webcasts on your ETF Dial,
Yeah.
DIAL, which is really unique, and especially with people looking for yield.
That's right. It's the intersection of quality, income, and liquidity. Dial just had its 2-year anniversary. It's the #1 performing multi-sector fund across active and passive in Morningstar category for the last year. We just couldn't be more pleased, because what it does is it validates the idea that an experienced portfolio manager is best suited to build rules as opposed to mathematicians.
Finally, a final word to advisors, where a lot of people are saying, hey, active's dead, it's all about passive. Does everything revert to the mean?
No, it's just not true. Active is not dead and passive is not dead, and everyone coexists. And I think that's what you see more and more, whether it's Schwab's intelligent portfolios or not. You see this combination of active and passive in an allocation.
Absolutely. As always, good seeing you, Marc.
Great seeing you, Tom.
Thank you.